The Fed is smiling today. We'll talk about why that is. I want to call your attention to a very important video I put out yesterday with a gentleman named Dr. Mike. We will talk about the New York Fed, maybe GDP now. Lots of stuff going on. This is Tuesday, December 5th. What is going on, folks? First, let's just jump right in. The JOLTS report was a huge disappointment. We are talking in order of magnitude miss, but in today's context, bad news is good news. So what we should be seeing today, I have yet to check, given the huge miss in the JOLTS report, is likely the 10-year Treasury is down. And more importantly, we might be on the cusp of seeing mortgage rates break 7%. It will be interesting to see what happens in Mortgage Biz Daily. But let's get into the numbers. Let's talk about last month first. Last month's surprise to the upside. It came in at an adjusted 9.35 million. Expectations for this month were for a slight drop lower to 9.3 million. Drum roll, please. 8.7. Folks, that's a massive miss. 600,000 lower. We have broke below 9 million. It is the lowest job openings number since March of 2021. March of 2021. So again, folks, about 2.5 years ago or so, we were at these numbers. I believe the Fed is smiling. I believe Jerome Powell is finally getting his lag effect. We are seeing more and more companies contract, right size. Remember, just yesterday, Spotify, whack, 17%. What happened today? Wells Fargo warned of a $1 billion restructuring charge, which will certainly include severance packages. Folks, I got a note the other day about where I think a lot of the pain will be in layoffs, and the answer is the same as last year. I believe it will be heavily skewed towards white collar. I believe it will be heavily skewed towards tech and finance. It just seems to be where that is at, and Spotify and Wells Fargo certainly fit those categories. But again, what should happen? Well, a couple of things I think will happen. One is today, the 10-year note will likely drop. I haven't checked. It's a wild guess. Hopefully I am right. Second, we will see further validation that the Fed is done. The Fed is done, the Fed is done, the Fed is done. We have talked about that for quite a while. Third, we will start to see movement in when the Fed will cut. I believe right now, the market, smart money, is talking late Q1, and many of the market are talking 4 or 5 cuts next year. It is going to be interesting. Now again, this is one report. We get another one tomorrow. We get another one on Friday. And again, the one on Friday counts the most, right? That will be the Bureau of Economic and Labor. What is the unemployment rate? What is job creation? All of that. But again, as of today, in this moment, the Fed is smiling. And you and I could watch the 10-year today and later this afternoon, see what happens to mortgage rates. Because we might see it'll probably be low 7s, but we might hit below 7% this week if the job numbers go the way that the JOLTS report did. And now, of course, it could totally go the other way. Nobody, I think, believes that, but hey, these numbers are weird sometimes, so let's see what's going on. How about the New York Fed? The New York Fed put out a calculation, I want to make sure I get this right, talking about the underlying inflation rate ticking down to 2.6%. Last time they did this calculation, it was 2.9%. Clearly, it appears the economy is slowing, the job market is weakening, and inflation is coming down. Kind of the three things that the Fed has been working on. It appears as we look at this on Tuesday that all three are happening in concert. I don't have up here, but I did write it down. GDP now. GDP now is important. It's important. Remember last quarter, earlier in the quarter, it was pointing to a 4.9% GDP growth. You and I laughed about it. We thought it was comical. But at the end of the day, it posted that number. And since has been revised up to 5.2. So we should at least take a gander. What happened to GDP now? It's done by the Atlanta Fed. It was running at over 2%. I think it was 2.1%. What just happened? Last Friday produced some very weak economics reports, and it has been slashed to 1.2%. Folks, going from 5.2 to 1.2 is exactly the deceleration that I saw coming and why I called the recession starting Q1, Q2. I did not think you could take an economy growing at 5% and get a negative number the very next quarter. But you might get a negative number in Q1 and a negative number in Q2. So I'm standing by my call that the first half of 2024 will be the recession as it starts. But again, we shall see. What is Paul Gamble saying? Paul Gamble's, see if I have his title. He's the managing partner at MBMG Group. He is highlighting that the Fed will cut 5 times next year and will need to start cutting in March. More and more people are seeing what's going on perhaps in the job market with inflation, GDP slowing down. I think you're going to hear more and more folks. And again, remember, we talked about this yesterday. The Fed, in theory, could cut rates just because inflation is falling. If inflation goes from 3 to 2%, the Fed could cut 100 basis points or 4 times and keep the restrictive nature intact. The last thing the Fed will want to do if an economy is slowing is be more restrictive. So what I'm trying to highlight here is we may get a couple of cuts without the recession being called yet, because all recessions are called in the rearview mirror. We may not hear about a Q1, Q2 recession until early Q4, for example. David Roche is out there telling you what I've been calling for 6 months now. The Fed is done, the Fed is done, the Fed is done. The next move by the Fed will be a cut, not a raise. So a lot of folks are starting to see the data and going, the Fed is done. I want to talk about Dr. Mike. Dr. Mike is a doctor of exercise science. He has a very huge and very entertaining channel. I have followed Dr. Mike for a couple of years now. Dr. Mike was actually on Chris Williams' podcast. If you don't know who Chris Williams is, look him up. He's 1.5 million subs. He's got these great guests on all these podcasts. He's an awesome host. Dr. Mike was on Chris Williams' podcast and showed me another side of himself, talking about economy, being happy, investing, all of that. So we had Dr. Mike on the channel yesterday. It went live at 5 p.m. It is almost a 60-minute conversation. But what I want to highlight with Dr. Mike is something that finally crystallized for me. If you've been watching my channel for the last 6 months, you know I've been struggling with the idea that most people look at their day job, their W-2, as a prison. Social media makes W-2 employees like me envious of entrepreneurs. And I think that is a huge mistake. In fact, Jason Pritchard and I had a half-hour conversation on it this weekend, and we published that video. I now believe, after talking to Dr. Mike, that most of us should look at our W-2, our day job, as the key to financial freedom and not the prison. If you simply change your mindset and go to work understanding that you're going to do this for a set duration, you can get financially free. Now, again, go check out that video with Dr. Mike. It is 60 minutes. He is wicked smart, wicked smart. I think you will enjoy it, and go ahead and give him a follow. Tell him thank you for coming on One Rental at a Time. He certainly didn't need to do that. I think he's got 1 million subs or something, but he came on and gave us a lot of value, and I appreciate him for that. Wells Fargo. I said this earlier, but looks like Wells Fargo has joined Spotify in warning about Q4 rifts layoffs, restructuring, adjustments, whatever you want to call it. They're going to take on nearly $1 billion restructuring charge, which will certainly entail more job cuts. China. We've obviously talked about the U.S. debt being credit rating being downgraded a couple of times. China just got put on notice. Moody's is cutting their credit rating to negative. Folks, we've been talking about China for 2.5 years, maybe 3 years, ever since Evergrande. Now country something and all this pain in the multifamily and in real estate space. Not a lot of good stuff going on. I think it's Country Garden from memory. They have a real problem. They have changed the psychology of their population. Their population for decades believed that real estate was a good thing. In fact, real estate was their pension, was their 401k, was their retirement. That is now blown up. So you are seeing consumers retract, move back. You are seeing deflation, not disinflation, true deflation. You are seeing asset prices fall. You are seeing bad debt rise. The government in China, it really has no good options. In my opinion, very quickly they are going to be left with one option, and that is to turn on the money printers and just debase the currency. We shall see. The other one is they could just throw the debt on the central government, I guess. But it is not looking pretty over there. And I don't assume that Moody's will be the last downgrade. It's got some numbers on people living paycheck to paycheck, and these are not good. Apparently, of the folks living paycheck to paycheck, it skews towards women. 59% of single ladies are living paycheck to paycheck, while 41% of single males are living paycheck to paycheck. The financially fragile, which is, a step down from that, are 67% women and 33% male. This is something that's a big deal to me. Obviously, growing up with my mom, watching my sister struggle, these are things that we need to understand. This is one of the reasons inside my family that we really built a portfolio where actually Olivia has a pile all by herself. That way, if I died or left or whatever happened, she would be okay regardless. We got to make sure that we are putting in place things to protect women in our life. They often take on the additional burden of raising kids. This is no secret, but we've got to make sure that we find ways. That's why talking to Anna Kelly and Beth Traverso and Casey is so important on this channel, because I want everyone to understand that we can take steps to be more financially secure. And then lastly, folks, a couple of things. We now have launched that virtual event. A lot of you asked for it. A lot of you said you wanted to join. So we have plunked down a bunch of money to have a couple of cameras, a couple of operators for the Zoom virtual event. We also took the price point from $199 to $99, like I said I would. It is now available. You can now book it. We've had 4 people sign up already. I will put a link below. Do me a favor, sign up early. Let me know that this was a good investment on my part. I'd love to break even. And then lastly, the Day 8 boot camp for the 40 some of you that are in the boot camp will be running Saturday. I finally sent out the email this morning. We are going to talk about investing out of area and investing out of state, and we're going to do that with the one and only Millennial Mike. Folks, at the end of the day, I want you to believe, I want you to change your mindset. Your W-2 is not a prison. It's a key. Not a prison, it's a key. And I want to thank Dr. Mike for helping me crystallize my opinions and thoughts. Folks, have an amazing day. We have more people to congratulate. Oe and Ann, congratulations on your next deal. I believe, if I remember right, this is your 9th deal, so congratulations. Jasper, congratulations on your deal. Rise, congratulations on your deal. Greg, congratulations on your deal. Oh, Greg, you got 2. Greg, congratulations on your deal. Peter, congratulations on your deal. And finally, Sean, congratulations on your deal. Folks, these are things that I put out. You can get these black cards. You can also get a gold card if it's your first deal. It is hard today. It is not impossible. Finding motivated sellers has only been easier in 2010. They are out there. You just need to believe. You need to do the work. You need to understand the numbers. You need to have a buy box. All the things that we talk about on this channel. Folks, that's quite a few people getting deals done right there. Take care, everyone. Bye-bye.